Interest rates are down. So what does that mean for the Spokane housing market? If you're looking to buy or sell, or just curious about what's happening in the local Spokane real estate market, stick around and we'll tell you everything that you need to know about what the lower interest rates mean for you. Hey everyone, welcome back to Living in Spokane, Washington. I'm your local real estate broker, Hunter McKay. Today, we're talking about the Federal Reserve's decision to lower interest rates. That's lowering the Fed funds rate and what that means for the local Spokane housing market. If you're thinking of buying and selling, you're definitely going to want to stick around to see how the lower interest rates can affect you. And as always, if you have any questions, don't hesitate to reach out. My team and I will be in touch. One important thing that I want to start off with is that when the Federal Reserve lowers interest rates, that does not automatically equate to lower interest rates on your mortgage rate. It's really important to know that the Fed funds rate is the rate at which banks get to borrow money from the Federal Reserve. And so their money did just get cheaper. That is important because if their money gets cheaper, over time, it means that they'll lend it out to us at cheaper rates because they still have to make a profit. However, banks know in advance, or at least anticipate in advance, what the Federal Reserve is going to do. We weren't 100% sure that the Fed would lower the rate, but we were all pretty sure that that was what was going to happen. And so in advance of this Federal Reserve meeting, most of the mortgage lenders over the last 6 weeks have already seen a sharp decrease in their interest rates. Some mortgage lenders chose to wait and announce as a marketing gimmick their lower rates in accordance with the Federal Reserve because they know that a lot of people are watching for that Federal Reserve meeting. And we all should know that when interest rates go lower, it means that our payment goes lower because we're not paying as much interest to the bank. One of the biggest things that we're going to see over the next couple of weeks is a drop in mortgage interest rates, if we haven't seen them already. Certain lenders, as I've already said, will have priced in this mortgage drop weeks ago. And so where interest rates were hovering around 7 to 7.25 at par, I know that a lot of people are now being able to get locked in rates at 6.25 or 6.5. That 0.5% drop in rate is a massive difference in monthly payment. Let's take a look at it. Let's take the average home price in Spokane right now, which is right around $425,000. I think that that's actually a little high, but it works for the sake of this example. At 7%, that monthly payment winds up being $2,828 a month. That's not including taxes and insurance. If we take that same loan amount and lower that interest rate to 6.5%, that payment drops to $2,686, so almost a $200 drop just with a 0.5%. That can make a huge difference in someone's ability to buy the home that they want. Over the last couple of months, as interest rates have stayed in the 7s and 8s, we've seen a huge pullback in ability for first-time homebuyers to join the market, especially in an area like Spokane. The average income isn't high enough to support the average home price when the interest rate is at 8%. And it's even harder when an average home buyer needs a down payment assistance program, which can raise the interest rate even above the standard par rate. With all of those things in combination, having a drop in interest rate like this from 7 to 6.5 or even into the high 5s in some cases, we're going to see a huge uptick in purchasing power from local Spokane buyers, and that is going to allow a lot of sellers who have been waiting on the market to probably get their home sold. Oftentimes, sellers say to me, "Hunter, why do I need to care about the interest rate? I'm selling a home. I'm not buying anything right now." Okay, but the buyer cares about the interest rate, and the buyer is the one that's bringing all the money to pay for your home. And so interest rates are really very important to sellers, especially if they're on the edge of an affordability line. Let's say that they have a home that's right around that average price point, but the average home buyer who's likely to buy that home can't physically afford to buy it right now. It doesn't matter if it's priced appropriately for the market. If the buyer who would buy that home is currently priced out because of affordability factors, the seller is going to have to figure out how to adjust things so the average buyer wants and can buy their house. A lot of ways that we can do that is by offering a rate buy down. And when the interest rate drops like this, the interest rate buy downs get a lot cheaper. I know that we've had other videos about interest rate buy down, so we'll link those in the comment section. But the biggest thing to understand is it's a prepayment to reduce the interest rate automatically on the loan. And so if the par rate has gone from 7 to 6.5, it's just an example. You'll have to check with your lender because it's definitely dependent on individual credit scores and loan program. But let's say that your par rate was 6.5, the rate buy down might be even cheaper than it was before. And so the seller can pay for the buyer to get an even cheaper rate, maybe affording them a higher purchase price and able to buy the house that they want, which can be the only way that the seller can get a buyer at all when markets are this tightly wound and affordability has crept out of the regular person's grasp. So let's talk about what these lower interest rates could mean for the Spokane housing market in general. Realistically, we have already been on a slow decline in price availability, client availability, and buyer affordability. What that means is month after month, less buyers have been paying the price that is the appraised value for houses. And so we're looking 6 months ago for the appraised value saying, yeah, this home is worth $425,000, but that doesn't mean anyone is willing to pay $425,000. Then the seller has to make a choice. Am I going to sell this home for less in order to entice a buyer, or am I going to take it off the market and continue living in it, hoping that I can get a higher price later? For the sellers that really need to move because they have a life job change, they're going to reduce the price and they're going to sell at a lower value. And so that has been dragging the price down month after month. With this drop in interest rate, we might see a lot of buyers get off of the sidelines and finally decide, hey, I can buy a house because the interest rates are dropping. So I'm not willing to say that prices are going to suddenly go back up in Spokane because we still have a lot of inventory. But I do think that we'll see a lot more properties sell at their expected appraised value, and sellers won't have to take quite as many hits as they have been over the last couple of months. Refinancing opportunities can also be discussed right now. A lot of people are probably still not going to be in a position where a refinance makes sense. If you bought a home in 2019 to 2021, you're probably sitting on an interest rate that's somewhere between 2.5% to 4.5%. If you have one of those really good interest rates, you don't want to do anything right now. There's no point. If you do need cash out, then perhaps the property value has grown enough that there could be a position to refinance certain properties. But for the most part, I would recommend that only people who have an interest rate above really 6.5% to 7.5% should be chatting with their lenders right now and finding out, is there any potential for a refinance? Are there rate buy downs that are worth it? I'm currently consolidating a lot of debt from my renovation, and I have an interest rate at 6.75. I could refinance right now and consolidate all of my debt onto an interest rate of 6.1%, but it's going to cost me almost $20,000 to refinance the property. It's not worth it to me to spend that $20,000 to reduce my rate only 0.6 of a point. And so I will be waiting and just consolidating my debt into a different loan type and waiting until interest rates probably drop into the 4s. Hopefully that will be middle of next year at current projections, but no one can be sure. And so we just continue to service the debt as best we can and pay attention to the interest rates and reduce them and refinance when it's a really good deal. A lot of buyers and sellers think that lower interest rates always mean that it's a good time for buyers to buy. I personally think that high interest rates can be a great time for buyers to buy because it means that sellers can be pinched into giving you a good deal. There are certainly tons of available opportunities and a great amount of inventory in the Spokane market right now. And so if you've been out of affordability and suddenly feel like, hey, these interest rates are finally where I can buy a house, then you're right. Now could be a really great time for you to buy. But you should always consider market conditions, your own personal affordability factor, and if you're ready to take the step in buying a house. And if any of that seems concerning to you, just reach out to me and we can sit down and have a no commitment conversation about what steps you could take in order to make sure that buying a house is a great time right now and that you do everything successfully. So whether you're looking to buy or sell, lower interest rates really can be a game changer. If you have any questions about navigating the Spokane market or lower interest rates, feel free to reach out to me directly. I'm happy to help. Don't forget to hit that subscription button and the notification bell. That way you can stay up to date on all of our latest real estate tips and tricks here in Spokane. Thanks for watching.